talk a bit more about the issue of South Africa's consumer price inflation numbers, which have jumped to that 5-year high of 6.5% through the upper limit of the Reserve Bank's monetary policy target range. It is the highest reading since January of 2017. The rate then was at 6.6%. Let's take this up with our business editor, Xolani Mbanjwa, who's with me in studio. Xolani, a good place to begin, I think, would be with the big ticket items that have sent the general price of goods and services so high.
Good afternoon, Tembegile. We should be afraid and very, very afraid because this sort of data is actually usually followed by some drastic action from the Reserve Bank MPC. But to talk about what the Statistics South Africa has said regarding the biggest price changes between the month of April and May, we can see sunflower oil up 16.1%, and we have seen that when it comes to inflation, just when it comes to between January and May, sunflower oil has gone up 38%. Diesel, as we know, now 8.1%. So when we look at the data, it is food items and petroleum, petrol, that has got us to where we are. Cucumber, a surprise there, 7.6%. Paraffin, 7.5%. All these items are staple foods. And right now, this basically means that our purchasing power has diminished. And it's something that we should absolutely worry about. Also, when you look at that particular graph, products that have become more expensive over the last year is passenger transport by air. That is no surprise there, because the airlines have been trying to actually recoup some of the losses during the hard lockdowns. 49.5%. Still, diesel is there, 47.5%. When you take the petrol price, whether it's diesel or the other grades of petrol, Tembegile, the price of those items has doubled in the past 3 years. Sunflower oil, as I said, you can see there in the past year, 39.7%. Petrol overall, 26.7%. So for the general public, for the normal Joe, this is something to worry about. And there's no end in sight when it comes to the warnings that we've seen. And looking at the others as well, you can see that it's fuel at 32.5%, some of the largest annual price increases between May 2021 and May 2022. Fuel at 32.5% higher, electricity and other fuels 14.4%, public transport 12.5%, and it is worth noting, Tembegile, that when it comes to public transport, the public sector, the public transport industry, particularly the taxis, have actually warned that they will be imposing some price adjustments, some price increases, probably at the end of this month or next month, which is not good for blue-collar workers.
And I'm glad you mentioned the issue of the impact on workers and other regular citizens, right? Because it's not a uniquely South African problem at the moment. I mean, in the UK, they're dealing with their largest rail workers' strike in decades, and that is exactly why the prospects, I'd imagine, for South Africa are very gloomy.
This is quite gloomy. We are not alone, as you've just mentioned, with the UK. Theirs is sitting at 9.1%. It's at historical highs, up from 9% in April, and it keeps going up. When you look at the US as well, these are developed countries. When you look at the US as well, theirs is sitting at, if I'm mistaken, 8.5%. That is decades when it comes to how much it has gone up. And we've seen the drastic action from the central bank, the Federal Reserve there, actually increasing interest rates by the highest margin in more than 30 years in trying to actually cushion consumers. So when you look at other countries as well in South America, it's ridiculous, at between 50 and 70% in countries like Argentina, because of what's happening, primarily what has happened with supply chain disruptions globally since COVID-19, which has been worsened by the war in Ukraine, with those grains and sunflower oil disruptions in terms of deliveries to exports to the rest of the world.
difficult to predict, of course, when a war will end, because, as you say, Russia's invasion of Ukraine is affecting the cost of fuel. But what are the expectations in the coming months?
In the coming months, the World Bank has actually warned. In fact, in their assessment, they have the forecast for global economy, for the global GDP, they have revised that downwards as a result of inflation. They are as worried as everybody else. Even when you look at the IMF, the inflationary pressures are top of mind right now. It's something that is going to be difficult for the rest of the world, particularly emerging markets like us, to actually deal with. But as we've seen with government actually saying they are actually considering importing Russian oil to actually to clamp down on the high increases in fuel. So there's drastic action that needs to be taken in order to cushion in consumers who are quite impacted when it comes to this. Everybody is impacted, not only your households, but businesses as well.
What then about the Reserve Bank and which way it's likely to swing, because things aren't looking too good there either?
Yeah, it's quite a big concern, because this is above that 6%, that midpoint, that point range when it comes to the Reserve Bank inflation target of between 3 and 6%. This is 6.5%, and we can expect that next month we will find that it will be higher as well. We can expect them to increase our interest rates. In the past 4 MPC meetings there has been increases, but we were expecting these, but not with such a huge pressure on inflation. Their main goal is to protect the value of our money, the value of our rand, and they have to do that by making sure that we can still buy some groceries with the money that we have, and it's something that we should expect that anything between 25 basis points and 50 basis points could be the announcement from the Reserve Bank Monetary Policy Committee come their next meeting next month.
Xolani Mbanjwa, Newzroom Afrika business editor. Well, thank you very much for breaking. I can barely speak. That's how worrying all of this is. Xolani Mbanjwa summing up the latest as far as inflation in the country is concerned. We'll